Who really pays taxes in America? When you think about taxes in America, what comes to mind? Maybe it's April 15th, when millions of Americans rush to file their tax returns. Or perhaps it's the deductions that chip away at your paycheck. But here's the real question: who really pays taxes in America? And, just as importantly, who doesn't? The American tax system is complex, layered with federal, state, and local taxes. From income taxes to corporate taxes, from property taxes to sales taxes, everyone contributes something. But the burden is far from evenly distributed. In this script, we are diving deep into the realities of taxation in the US, who shoulders the burden, who escapes it, and why the system works the way it does. Number 1. Understanding the basics of the tax system. America's tax system operates on a progressive model, meaning the more you earn, the higher your tax rate. At least, that's how it's supposed to work in theory. Income taxes: the federal government collects the bulk of its revenue through income taxes. In 2023, the top tax bracket was 37% for individuals earning more than $578,125 annually. Meanwhile, the lowest bracket is 10%, applied to incomes under $11,000. Payroll taxes: these fund Social Security and Medicare, and they are shared between employees and employers. Corporate taxes: corporations are taxed on their profits, with a flat federal rate of 21%. But even within these categories, there are loopholes, exemptions, and deductions that can significantly alter what someone actually pays. Number 2. The wealthiest Americans, masters of the tax code. You've probably heard stories about billionaires like Elon Musk or Jeff Bezos paying little to no income tax in certain years. How does this happen? The role of capital gains. The ultra-wealthy don't rely on salaries. Instead, their wealth comes from investments, which are taxed as capital gains at a maximum rate of 20%. This is far lower than the top income tax rate. Borrowing against wealth. Instead of selling assets and incurring taxes, many billionaires borrow against their holdings. This gives them liquidity without triggering a taxable event. Charitable contributions. Large donations to charities not only enhance a wealthy person's public image but also offer significant tax deductions. Real estate and depreciation. Real estate moguls like Donald Trump often benefit from depreciation rules, allowing them to deduct the declining value of their properties, even as those properties increase in market value. In essence, the wealthiest Americans often pay far less in taxes as a percentage of their income than the average worker. Number 3. The middle class, the backbone of the tax system. The middle class, often referred to as the backbone of America, shoulders a disproportionate share of the tax burden. Income taxes. Most middle-class Americans earn their income through wages, which are taxed at standard rates. Unlike the wealthy, they can't rely on capital gains or tax shelters. Payroll taxes. For many middle-class families, payroll taxes are a larger burden than federal income taxes. Social Security and Medicare taxes are flat, meaning everyone pays the same rate regardless of income. Sales taxes and property taxes. These regressive taxes hit the middle class hardest. Whether you're buying groceries or paying for gas, sales taxes take a bigger chunk of a middle-class family's disposable income compared to a wealthy household. Number 4. The corporations, playing by their own rules. In 2020, over 50 of the largest US corporations, including names like Amazon and Nike, paid zero federal income tax despite making billions in profit. How is that possible? Tax credits and deductions. Corporations take advantage of research and development credits, green energy incentives, and depreciation rules. Offshore profits. Many companies use international subsidiaries to park profits in low-tax countries. For example, Ireland's corporate tax rate is just 12.5%, far lower than America's. Stock-based compensation. By paying executives in stock options rather than cash, companies can deduct these costs while avoiding payroll taxes. While corporations do pay payroll and property taxes, their ability to minimize federal income taxes raises questions about fairness in the system. Number 5. The lowest earners, paying through other means. While the poorest Americans often pay little to no federal income tax, they contribute in other ways. Sales taxes. These taxes are unavoidable and hit low-income families the hardest. If someone earning $20,000 a year spends $15,000 on necessities, they are paying a significant portion of their income in sales taxes. Payroll taxes. Even minimum wage earners contribute to Social Security and Medicare. Sin taxes. Taxes on cigarettes, alcohol, and even sugary drinks disproportionately impact low-income households. For many, the lack of federal income tax liability doesn't mean they are escaping taxation altogether. Number 6. State and local taxes, a mixed bag. State and local taxes vary widely across the US, creating a patchwork of tax burdens. No income tax states. States like Texas and Florida have no state income tax, but they often make up for it with higher sales and property taxes. High tax states. California and New York have some of the highest state income tax rates, but they also provide more robust public services. Regressive impact. Across the board, state and local taxes tend to be regressive, meaning they take a larger percentage of income from low and middle-income families. Number 7. The ethics of taxation, fair or flawed. The disparities in who pays taxes raise questions about fairness. Arguments for the wealthy paying more. Progressive taxation is based on the idea that those who benefit most from the system should contribute the most. The wealthiest individuals and corporations rely on public infrastructure, legal protections, and educated workforces, so shouldn't they pay more? Arguments against. Critics argue that the wealthy already pay the majority of federal income taxes. In 2022, the top 1% of earners paid nearly 40% of all federal income taxes. The debate often comes down to whether the tax code should focus on equity or efficiency. Number 8. Tax reform, what needs to change? While the tax code has been reformed many times, loopholes and inequalities persist. Possible reforms. Closing loopholes that allow corporations to avoid taxes. Implementing a wealth tax on billionaires. Increasing the capital gains tax rate to align with income tax rates. Challenges. Tax reform is often met with resistance from powerful lobbying groups and political gridlock. Number 9. What you can do as an individual. Understanding how taxes work can help you make smarter financial decisions. Strategies to reduce your tax burden. Maximize contributions to tax-advantaged accounts like 401(k)s and IRAs. Keep detailed records of deductible expenses, from business costs to charitable donations. Work with a tax professional to identify opportunities specific to your situation. Conclusion. So, who really pays taxes in America? The answer is complex. The wealthy, the middle class, corporations, and even the poor all contribute, but in vastly different ways. The question isn't just about numbers, it's about values. The tax system reflects what we prioritize as a society. Do we value equity, efficiency, economic growth? As long as these questions remain unanswered, the debate over who pays taxes will continue. Remember, the more you understand the system, the better equipped you'll be to navigate it and maybe even change it for the better. Number 10. Taxes aren't just about money, they are about power, responsibility, and opportunity. So the next time you see a headline about someone not paying their fair share, ask yourself, what kind of system do we really want?